I don't know. If you're happy with a dividend payment and the stock you own does this over the last few years, I don't know. It's not much of a consolation prize. You're certainly not getting a podium finish.
Happy Friday, everyone. I'm keeping with the Friday vibes. I'm pretty excited about the weekend. Nick, it looks like you're attending a funeral. Why is that?
It just seemed appropriate. July was a terrible month. August not getting started on the right foot either. And I guess we're here to trash on Intel a bit more, huh?
Yes, we are here once again to trash on Intel. And I think it's appropriate before we talk about what's happening right now. Let's go all the way back to when we very first started this channel. The very first video in which you talked about an actual semiconductor company, you talked about Intel.
Yeah. And specifically to avoid it, September 2022. That was like after laying down the thesis for starting this channel, the belief that semiconductors would be the foundation of the next bull market. We said avoid Intel and then proceeded to say buy NVIDIA, Broadcom, AMD, Qualcomm, and some others. It brings us no pleasure whatsoever to continue to dog on Intel, but let's be real here. This is like corporate gaslighting at its finest with this most recent earnings update. This is pretty bad.
We have a few slides prepared with some of the comments and timeline of our coverage on Intel. We'll have that in our video show notes. You can get those over on Discord with your Semiconductor Insider membership, or you can get them on Ko-fi a la carte. It's only $5 a month and gets you a ton of benefit. Lots of exclusives on our Discord channel, as well as live Q&As. So check that out. $5 a month. You can cancel anytime you want if you don't find it valuable.
And included in that $5, obviously you probably get the sense of things right now that we're, not interested in Intel stock. Included in that membership, we do talk about what we are interested in buying right now. Check it out.
Let's just go through Intel's Q2 financial highlights briefly. 12.8 billion in revenue, down 1% year over year. Gross margin 38.7%, down 1.1 percentage point year over year. And the earnings per share on a non-GAAP basis at 2 cents, down 11 cents year over year.
Yeah, and far below guidance that was provided just a few months ago. So let's talk about the corporate gaslighting, shall we? If this is what you want to do to your shareholders, and really, let's face it, not just shareholders, the world is interested in Intel's progress here. I think the consensus has become that the world needs geographic diversification in manufacturing. So if you want to gaslight the world and pretend like everything's good and fine when it's really not, this is how you do it. Pat Gelsinger on the Q2 earnings call talked about some of the lackluster guidance for Q3, which we'll talk about here in just a second, is due to inventory digestion within their CCG and DCAI segments. The CCG client computing group is PCs and laptops. DCAI is the data center and AI group. Okay, so the emphasis here is being placed on the fact that they're going to grow sequentially from Q2 to Q3. Kasey, what's the problem with inventory digestion, though, at this point in the semiconductor industry cycle? What does this actually mean?
That is a great question, Nick. It means that there is a lot of inventory that no one wants. And the issue with that is looking at our market segments and the current cycle trend, consumer products like PCs and smartphones, focus on the PC here because this is Intel we're talking about, and cloud and enterprise are both at the start of a new growth cycle. The last thing you want at the start of a new growth cycle is a bunch of inventory that no one wants. Something's wrong with that picture.
Yeah, we've already been talking about this plenty. Obviously, NVIDIA is a special case with the AI infrastructure, accelerated computing infrastructure. Inventory is tight. They can't crank out enough accelerated compute systems to meet demand. But check out the AMD video earlier this week. Over on Discord, we also did a thread on Qualcomm. Inventory levels have actually normalized in these primary segments for Intel. Intel's already been working on digesting inventory now for better part of a year, over a year. Everybody else fixed the problem. Like you said, the fact that they're now suddenly again having excess inventory means something is wrong with their sales funnel. Customers aren't buying all of a sudden. That means they're buying competitor chips. Okay, second point. Tell us, what is this 5N4Y business? What's this all about?
This is Intel's plan that they have stated at the outset of all of this rebuilding. They planned on having 5 nodes, advanced logic chip nodes, in 4 years. And ultimately, what these 5 nodes in 4 years, what they're getting at is manufacturing processes. Just as you would hear with Taiwan Semiconductor, there's advanced nodes that they're making. Those are more and more advanced chips. That's exactly what Intel is referring to as well.
Yeah, so they've been ramping this up. Intel 7, which is actually 10 nanometer dimension chips. These are just marketing terms. Intel 7 is the one that's currently now in full production. Intel 4 is about 6 to 9 months into ramping up to full production. And then Intel 3, 20A, and 18A are getting ready to enter commercial production later this year and into 2025. Okay, the problem with this is, again, Gelsinger saying the finish line is in sight, but only 2 of the 5 manufacturing processes are actually complete. The other 3 are still under development, even though they've been working on building them out. They are not in production yet. And of the 2 that are in production, the first one, Intel 7, is having some issues. Kasey, this is what a finish line looks like. We're in big trouble.
Yes, Intel is in big trouble. The instability of these Raptor Lake desktop CPUs has been well documented. Many people are complaining that these chips are prone to crashes and those blue screen of deaths. If this is what Intel is planning on producing, it's not going to be very pretty in the future, is it?
Yeah, because manufacturing processes that they're working on are harder than Intel 7. So suffice to say, this is concerning. The first and least advanced of these 5 nodes in 4 years processes is having some serious issues. We always stated all along that this was a very aggressive timetable that was going to be prone to problems. Sure enough, here we are.
Before we move on to the last point in our trashing on Intel, let's talk about an app we've been using recently, Moomoo.
We actually have a special offer exclusive to the Chipstock investor channel. Through the end of August, you can earn up to 20 free stocks simply by funding a new account if you're a new user in the United States. 5 of these stocks are exclusive rewards to Chipstock investor. You land those if you deposit $1,000 into a Moomoo app account.
In addition to those 20 free stocks, Moomoo is offering 8.1% APY on your uninvested cash in the Cash Sweep program for the first 3 months, making sure that your cash continues to work for you while you're looking for where you want to invest it. Maybe not Intel. And uninvested cash is free of management fees, and you can make deposits and withdrawals at any time. You also get a transfer in bonus of 1.5% cash back on your initial transfer, which is valued up to $300. Moomoo offers 0 commission on stocks, options, and ETFs. There's no minimum deposit requirements, no account management fees, and no hidden costs. Make sure you get your 20 free stocks by signing up in the link below.
So that last bit on 8.1% APY on uninvested cash is a good segue into this last bit. As you may know, Intel has been accepting all sorts of cash and tax benefits in the US and in Europe. 5.9 billion reported just in the last quarter alone, which they conveniently add back in for their adjusted free cash flow metric. And in tandem with that, they are laying off up to 15% of their workforce through the end of this year. Interesting. Intel management would like us to continue calling this their smart capital strategy. so that they can conservatively manage the day-to-day business. However, that smart capital strategy for over a year now has included continuing to pay a dividend, which they slashed after the first quarter of 2023, after we said that it needed to be gone, done away with, nixed. Well, they cut it, but they still will have burned through $3 billion by the time it's all said and done when they cease to pay and suspend this dividend starting in the fourth quarter of this year. Not a good look.
No, especially when you have to lay off 15,000 people to get to this point. And on top of all of this, the stock has done super poorly. So that dividend didn't really even mean anything, right?
Yeah, I don't know. If you're happy with the dividend payment and the stock you own does this over the last few years, I don't know. It's not much of a consolation prize. You're certainly not getting a podium finish.
No gold medal in this game.
No. And along the way, this smart capital strategy hasn't exactly strengthened the balance sheet. Balance sheet still upside down, way more debt than cash, which is exactly the opposite of Taiwan Semi Manufacturing, the company that Intel is trying to chase down. They have more cash and investments than they do debt. Early in 2023, we set the dividend needed to go. Intel decided to cut the dividend, but keep some of it intact. They're finally getting rid of it. Finally, I guess, is all I can say about that. Okay. The question inevitably here is going to be, the stock got wiped out again, 20% after hours after the Q2 update. It looks cheap. Surely it's a buy. Yeah, it very well could be. What are we looking for, though?
We still need to see a few things that would get us not investing in Intel, but would at the very least make us interested in looking at investing at Intel. And as you mentioned, that first point, the dividend is going to be eliminated, and that's needed to happen. I think you called that out in January of last year, but finally it's going away. The second thing, though, that we would need to see before we would get interested is hiring a new C-suite. One of the questions on our recent live Q&A was like, how much weight do we put on a CEO in a business? And the answer is it depends. Ultimately, it depends. But in this case, it matters a lot to us. It's a big factor.
Yeah, it's been over 3 years. When Intel rehired, I should say, Pat Gelsinger in February 2021. He was coming home, old Intel engineer, but engineering skill set is not the same as a good CEO skill set, especially when you have a business that has been compounding mistakes and missed opportunities for 2 decades now. You need more than just someone with good engineering acumen to turn things around. It hasn't been a good 3-year tenure, 3-year plus tenure. Things just continue to deteriorate. Of course, the semiconductor market was brutal during that span of time. However, lots of other companies that got clobbered by the bear market are now doing just fine. So I think that brings us to the third point here. I don't think the current C-suite is the right fit for the job ahead, but whoever may or may not be at the helm of Intel, there's a really important thing that they need to do.
Yes, they need to divide the business into 4 realsies, not just on paper. Similar to what AMD did with Global Foundries, that's what Intel needs to do with their foundry services. They need to have that as a completely separate business.
Yeah, Intel wouldn't even be trailblazing here. They wouldn't be in uncharted territories. AMD already showed the way. I don't understand this thinking where we have to restore Intel to its former glory. It's not the 90s anymore. It's the 2020s. The world's different. It's changed. Split Intel in 2. Have Intel, the chip designer, as a separate independent business, able to forge its own path. Intel Foundry, have it as its own separate business, able to forge its own path forward. Don't starve the business of needed capital by trying to keep it intact to return it to some sort of previous heyday from 30 plus years ago. Times have changed. Make the difficult decision and split the business in 2. Just do it already. It's needed to happen. Splitting it in 2 for financial reporting purposes and accountability and more visibility so that the 2 separate businesses, separate but still the same business, can wheel and deal. It's confusing. It's weird. The industry's moved on from the IDM integrated device manufacturer model for advanced logic chip making. It's okay. Intel can make a comeback, but we don't believe it can happen in this current form, in this current structure.
It's been made clear that we're not interested in Intel stock. There are a lot of other companies that have been performing much better, that have had some great pullbacks in this last month that are great buying opportunities. And this is just not one of them.
Yeah, it's just too much risk to over allocate any capital to.
You can find our rants and rages on our Discord server. You can get membership access to that via our Semiconductor Insider. Again, just $5 a month. It may not seem like much, but it is a lot to us, and we really, really appreciate all of your support. See you again soon at Chipstock Investor.